Good afternoon and welcome back to the latest edition of the InvestTalk market analysis for the week ending May 17th, 2024. I'm host Justin Klein, and today's video is going to be titled Bulls Charts New Highs as Precious Metals Break Out. And that's simply what this was, a breakout in many respects, and we'll get to the charts in a bit. But we'll talk first about the economic news per usual. You had Tuesday, I think it was, producer price index that did tick up to over 2%. That's the highest level since April of last year. So the highest level on the producer price index in over a year. Now remember, this is the leading indicator to CPI, meaning what happens here with PPI typically feeds into CPI 3 months down the line. Okay. And the next day, on Wednesday, you had a consumer price index that came in a bit softer, 3.36. Now, if we go back here, right, you go 1, 2, 3 months. What did you see? You saw a tick down a bit on PPI, and so that fed a little bit into the CPI. So what I'm expecting, and you can even add on what's happening lately with commodity prices, I'm expecting while this has evened out around 3. I think this is likely headed modestly higher over the next 6 months. I don't think we're going back to here. We're not going to 8, 9%. But is this close? Is this generally tick back closer to 4? Probably. Now, the only thing that would hold that back is the CPI, or sorry, the shelter part of the inflation number. This has some more room to the downside. But all the other factors could easily see some acceleration in inflation as we head into the back half of the year. And now core CPI did tick down as well to 3.62. But if you look at things like import prices were up for the second month in a row, positive year over year for the first time since late 2022, early 2023, right? December, January. It's the last time we had 2 months in a row of positive year over year import prices. Export prices, they're still negative, but ticking closer to that zero line. So just a heads up on that the leading indicators for inflation are pointed up. Now that's the inflation side, and there's the growth side of the economy. Here is the industrial production year over year that did tick into negative territory. So it's been fairly choppy. Let's look at the COVID era here. It's been kind of around that zero line for pretty much the entire year. We ticked into negative territory. Now, not breaking down, not breaking up, but still generally weakening overall. Capacity utilization year over year down about 2%. So this is how many of those factories are actually being utilized. Are they being run at full capacity? And it looks like increasingly that's not so. Then if you look at the unemployment claims, the continuing claims that did tick up. Now, not a breakout here, still kind of around that 1.8 million on the unemployment rolls, but the initial claims for unemployment that ticked down on the week, but still relatively elevated from around that 200,000 to 10 mark that we were seeing for most of the year. So not quite a breakout, but certainly something to watch. Now, what did the markets think of all of this economic data? Well, overall, their reaction was a bit dovish. You can see 1 week ago, the odds this is December. Okay, this is the December Fed meeting. June, it's pretty much guaranteed. There's no change. But it's all about what those expectations are between now and kind of year end, because we still have, let's see, we have 5 more meetings left, and there was a 12% chance there'll be a pause through the end of the year. Now it's only 10, and there's a little bit higher chance of 2 rate cuts here from 35 to 36, and 3 rate cuts is go from 15 to 17, and 4 rate cuts is going from 2.4 to 3.4. So the economic data was, at least in the market's mind, was, hey, the jobs picture looks a little softer. The inflation data looked okay to a little weaker, which is obviously positive, gives the Fed room to ease, and so they adjusted accordingly, not in a major way, but certainly that hit things like the dollar, which was down on the week. Okay. And that really ignited, and I'll pivot over here to the charts, the gold trade, right? Gold and especially silver. Now I'll look at the silver to gold ratio that's here, and you're seeing that breakout. I've talked many times, and this was one thing that made me say, okay, we're not in a roaring bull market for precious metals until silver starts to outperform gold. Now it wasn't breaking down, but it wasn't breaking out until this week. So precious metals, and that's why I titled this video, precious metals break out. They're breaking out, but the bulls generally on equities are in charge, and the path of least resistance remains higher here. Let's get to a daily chart. There we go. And so that's what you're ultimately seeing. Utility stocks remain strong. Here are the Qs. Okay, the Qs are at new all-time highs as well. So, the path of least resistance is up. Now, could this be a false breakout? The MACD is kind of telling you that it might be, right? You're seeing a divergence there. Go back to the S&P here, SPY. You're getting not as much of a divergence, but some there. Let's go to the cash index. Same kind of thing. If we go to like the NYSE, here's the NYSE, much broader index, but that is also breaking out, but still getting a similar look there when it comes to the MACD. The VTI, Vanguard Total Stock Market Index, let's clean that up a little bit, similar type of divergence. So while, this isn't a market you short, a lot of people might look at this and say, oh, the market's too expensive, or, it's overbought and I want to short it. And you just look at this last little pullback in markets as an indicator that with the liquidity dynamics in the market, the path of least resistance remains higher. Doesn't mean you can't have pullbacks, doesn't mean you can't have a little bit of market volatility, but ultimately the path of least resistance, once again, is higher. And a lot of this is the VIX. Look at the VIX down to 12. So we know that a low VIX number certainly brings a quiet, positive, bullish market. Okay. Now, here are the Treasury bonds 10-year. So we're getting a bit of rally in the 10-year, although pulled back over the last couple of days, which means rates have been dropping, reflecting that more dovish outlook in the market. But what happens if that, as I pointed to earlier, that you get a higher inflationary environment through the back half of the year? Does this roll over again? I think that's certainly possible. Remember, we're just a handful of months away from the election, and that's certainly going to bring some volatility as well. Now, if we look at, and when I talk about the election, you can't not talk about the MOVE index. The MOVE index is in a downtrend, and no issues here. This is another reason why you have to be relatively bullish. The credit markets, or the treasury market, remains well supplied and well bought. So we're good there. The credit markets, here's short-term junk, short-term treasuries. That remains solid. So credit spreads remain relatively tight. Growth to value, you certainly are getting a very choppy period. But if you go to a weekly, here, this is a consolidation for potentially break lower. So, is this a catalyst for the commodity markets to take over, for lead in the leading the markets higher? I think that's certainly possible, especially when you look at this, the Bloomberg Commodity Index. This is now above the 50-week moving average. I moved to a daily. This is breaking out. No way, no ifs, ands, or buts about it. And that's what's interesting here, is that this is happening with, yes, the dollar was weak, but generally it's still in an uptrend, right? What happens if the dollar does go into a downtrend? I think that will be a very interesting environment to watch in mixed the commodities. Gold miners, I forgot to cover that. That's breaking out as well. So you're getting a lot of strength just from uh, really the harder assets that are out there in the economy. Industrials, that's consolidating still bullishly, but interesting that this isn't following let's just go small caps. It's kind of rolling over in relation to the small caps. So that's something to watch. Also, the Dow Jones Transportation Index. Let's see if this wants to come up. Let's go IYT. go. So this is transportation. That's not confirming these new highs, so something to keep an eye on. I don't want to get too caught up in that though. So many people do. Oh, the transportation index isn't confirming, but the reality is, that doesn't indicate the market's going to roll over anytime soon. Frankly, the liquidity situations are so strong in the markets that it's hard for me to see a real breakdown in the near term. At best, I think you get a choppy environment going forward. And here's XLE. This had that pullback and starting to get some strength as well. So you're seeing energy getting a breakout to the upside. Uh, UNG also. This is the natural gas market that's starting to break out to the upside as well. A lot of this too, I think, a catalyst for this is looks like China is supporting their housing market. Um, and that's an area that has been a drag on global demand. But if they start to support the housing market and building, that's going to sop up a lot of raw materials, a lot of fossil fuels, energy, and so it's something definitely that can take markets much higher from here, despite an economy that's it's not amazing, but um, everything's not going to hell in a handbasket either. You see the jobs picture, et cetera. So overall, you have to look at this market as generally bullish, but with some rotation. You look at let's take a look at XLK. What was interesting too this week was look at the last 2 days. The technology sector didn't do much. In fact, it was down. Same with SMH, just making a double top here. You had that reversal. It's not uncommon to see this. Let's go to a weekly on here. This is what we call a topping tail. All the AI craze, you get a top, you get follow through the downside, and a lot of times what you'll get is a retest of that high before the ultimate rollover. And so I would say I'm modestly bearish on the tech sector, especially the semiconductors. We have the Nvidia earnings out next week. That's something to watch. So that could be a catalyst there. Obviously, there's a lot of high expectations for what's going to happen with Nvidia. If they do not meet those high expectations, this could easily have a 20-30% down day. And that would spark, a sell-off in technology. So that's kind of my base case here is just a continued market rotation, out of growth and into value. You saw that really starting in the fall. And the only thing I say that was this big rally here. If you take that out, this is overall in a pretty rough situation. And that could be a catalyst for a market pullback in June. We just finished with May OPEX, and then June OPEX is a big month for that quarterly OPEX, and something to consider that could bring more market volatility. Um, but you have to be bullish on commodities overall. This picture is one that has a lot more upside. Let me go. Sorry, one. There we go. If you take anything away from this particular video, look at this. You had the breakout during COVID in commodities. You had just a bull flag here that lasted roughly 2 years, right? Early 2022 all the way to the end of 2023, right? And since basically the beginning of this year, February, call it, this has been going up. And this is breaking out. There's a lot more room to that upside. And that would change the dynamics of the market if that is the case. And I'll show you this going back to that growth to value trade. Go to on a weekly. When did that peak out? Right here. Growth to value. So growth peaked out here, and you have this long period of value outperformance. Okay. If you get this, right, this is if you get the commodities to break out, this is going to change the tenor of this market, and that's what I'm kind of watching for. So we'll see what NVIDIA brings us next week. I hope that was valuable to you. I appreciate you all tuning in and liking and subscribing to this channel, as well as our podcast, InvestTalk. I want to remind you the contents of this video are for educational purposes only and should not be construed as a recommendation to buy or sell a security or to participate in investment strategy. The views are my own and do not represent those of KPP Financial or those associated. Have a wonderful weekend.